American Eagle Outfitters. Let's listen to a bit of analysis from Parkev at 1x speed. A reasonable 1x speed with a computer that
Is it still a buy, or is it too late?
doesn't
Since the
lag.
stock has nearly doubled after reaching around $8-9 a share on the low around June of this year. So I'll discuss the latest developments at American Eagle Outfitters according to what the management team
You
described in their
guys
latest
can
quarterly
hear what
earnings call
he's
with Wall Street
saying.
analysts. I'll share with you the valuation of this company and give you my rating
And
whether I think it's a buy, hold, or a sell at the new higher
Ethereum's at
market
4,600.
prices. That's a lot to cover in this short video, so let's jump right into it after a brief message from my sponsor. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So American Eagle's management team described the latest quarterly performance, saying that product initiatives across brands, exciting new marketing campaigns, and greater operational disciplines are all contributing to improved business results. And of course, investors love to hear that kind of report from the management teams of the companies that they're investing in. A lot of times, management teams will tell investors, we're going to try this new thing and we're going to spend this money and energy and time, and we think it's going to work. And then they come back to investors 3 months or 6 months or 9 months later, and they say, you know what, that didn't work out as we thought. But you know what, we learned a lot from this plan, and we're going to take our learnings and move forward, right? And that's a disappointing result. What you'd rather hear is what American Eagle Outfitters is saying here is like, we tried something that we thought was going to work, and it turns out it is working, and it's resulting in more revenue and more profit, and that's great news for shareholders. The management team saying that still there's a lot of hard work ahead, but we're excited about the progress. Yeah, of course, if you find something that works to turn your company around, you're always excited about that kind of progress. You're excited when things work and you find an area where you can keep digging and keep mining that gold that you found. So total revenue came in at 1.28 billion, and that was the second highest ever quarterly revenue figure for American Eagle. They're making meaningful improvement from the first quarter and validating the actions they've taken. Aerie saw a dramatic turn from the first quarter, delivering comp growth of 3%. American Eagle saw nice improvement in categories as Jen will review, and second quarter traffic was positive across brands and channels. The management team was pleased to see traffic momentum build throughout the second quarter, which continued into August. So that's the third quarter. That wasn't included in the second quarter results. But what the management team is saying here is that the performance continued improving through the month. And even after the quarter completed and they entered into the third quarter, the results continued improving even more. In addition to growing revenue, operating income improved by 2% to 103 million, significantly exceeding our expectations. Earnings per share increased by 15% year over year. By the way, this document I'm reading from is American Eagle Outfitters' second quarter fiscal year 2026 earnings call with Wall Street analysts. I've made this highlighted document available for my channel members, and you can join my channel as a member for less than $5 per month. You see the link in the description for all the benefits you get for joining these highlighted conference call transcripts,
This
where there's
could be in
dozens
the
and dozens
weeds.
of these in the file that you get access to, is only one of the benefits you get as a channel member. So one of the biggest things every investor is looking at when looking at an investment of a company that sells physical products is how the company will be impacted by tariffs. The United States increased the tariffs they are charging for United States businesses that are importing goods from outside the United States. So that's going to increase the cost of goods sold for a lot of companies, including American Eagle Outfitters. So the management team knows that investors want to know about how they're dealing with tariffs. So they did elaborate here saying, with respect to tariffs, we will begin to feel the impact in the second half
That's
of
a
this
good
year.
point. Tariffs
So that means
on a
they haven't
retailer.
started to feel the impacts just yet. And many businesses are in this position where the impacts of tariffs haven't hit them yet because a lot of the products they have that are selling right now are products that they ordered last year and products that they ordered earlier this year to get ahead of the tariffs to have inventory on hand before the tariffs increased. So they're using everything in their power to mitigate the tariffs, and early efforts have been successful. They've taken action to assure manufacturing options are in place in countries that make the most sense for our business moving forward. And I've seen a lot of businesses do this. Uh, One of the main things businesses are looking to do is move manufacturing outside of China because China faces the largest tariffs of any country. And so if you move manufacturing outside of China, they're still not bringing manufacturing back to the US because it's prohibitively expensive, but moving from China to Vietnam or from China to Malaysia or from China to South Korea, that mitigates the tariff impact to some degree and still allows companies to benefit from the lower cost of manufacturing outside of the United States because it's so expensive to manufacture products in the United States for many, many reasons I don't want to get into. That would be a whole video in it. So now that we looked at the latest developments, let's take a look at valuation. So American Eagle stock is now trading at a forward price to earnings of 13.8. This is about on the higher end of
My
where
only
this stock
concern
has
is how
traded for, going all
timely
the way
this
back to January of 2024.
CFA's information
Of
is.
course, in April, when the biggest fears from the tariffs caused the stock price to fall, you could have bought this stock at a forward price to earnings of less than 9, and now it's trading at 13.8. But this is after the company demonstrated successful initiatives, a really strong marketing campaign to improve the business. So, to answer the question, do I think the stock is a buy, hold, or a sell? I have American Eagle stock rated as a buy. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.
Portfolio, the important thing to focus on is
Now
to
let's
build a
listen to
portfolio
a
that fits you, that
CPA
fits your risk
talking about
profile,
stocks
fits
with
your
women.
time horizon, and fits your end goal. If you're a high growth investor that likes to take risk, then having something like Procter and Gamble probably isn't a fit for your portfolio. However, if you're a conservative investor and investing in high growth, highly volatile investments, also might not be a good fit for you. But if you're a balanced investor like myself, then you're going to have a combination of more volatile stocks, but also dividend paying stocks. But in today's video, we are focusing on 5 ultra growth stocks. And I'm talking about companies with massive upside, not a $4 trillion company that's going to go to 8 trillion, because that's not all that likely in a quick time frame. But here we're talking about massive gains. So if this is something that might fit your portfolio, you're going to love today's video. But before we unveil those, do me a huge favor. Show your appreciation for the content by just simply clicking that like button down below. I appreciate it, and it really helps the growth of this channel. And with that being said, let's jump into it. Hey everyone, Mark Rusin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And when it comes to investing, the important thing, especially early on, is to never invest blindly. Never invest just because someone told you a stock is a buy. You need to understand how to analyze stocks, understand is it a fit for your portfolio, and understand how to value stocks as well. And in my years of a professional investor, the number one research tool that I have come across has been fiscal.ai. It is a one-stop shop from looking at analyst reports to looking at the latest earnings reports to analyzing stocks, looking at segment breakdowns, valuing stocks, and so much more. From within fiscal.ai, you can do any research you want. You could be looking at the financial numbers like revenues, operating profits. You can mix in free cash flow and what have you. But you can also look at segment results or non-financial type data that companies provide. For example, if you were researching Robinhood, you could see their user growth over the years. Or let's say you were looking at Spotify and you wanted to research their subscriber growth and much more. Fiscal.ai has all of these items. And by utilizing my link down in the description below, not only can you get yourself 2 free weeks to try out the platform for yourself, but you can also get 15% off any of their paid subscriptions after that as well, because I know you're going to love it. All right, let's jump back into our video, taking a look at 5 ultra growth stocks. And let me preface this before we even get going here, is the fact that we are looking at high growth potential stocks. But when we're looking at companies that have high potential, they also tend to have high volatility, meaning you need to be able to stomach the highs and the lows. These are companies that I believe have 2x, 3x material in a short period of time here. We're not talking about huge companies like a $4 trillion company going to $8 trillion. That's much more difficult to do. So much smaller in size companies here, but not penny stocks by any means either. All right, let's begin with our list, taking a look at ultra growth stock number 1, which is going to be SoFi Technologies, stock ticker SOFI. And the reason I want to start with SoFi is, number 1, it's the largest company on the list that we're going to be looking at here today, to kind of give you an idea of the type of companies, size of companies on the list. But it's probably, of all of them, the most well-known as well. And again, we're not talking about companies that are going to be up 10 to 15% over the next 12 months. Those are solid returns. But if we're talking about ultra growth stocks, there's obviously a higher element of risk that goes into them as well. And looking back 12 to 24 months from now, maybe not all 5 of these are going to work. But as it stands right now, and based on the data that we know from each of these companies and the direction they've been heading in, I have a high level of confidence that these companies could 2x and 3x, if not more, in the coming years. Taking a closer look here now at SoFi, the company has a market cap of $31.1 billion. They operate out of the financials sector, and over the past 12 months, get this, shares are up 250%. So again, when it comes to SoFi, the largest company, we're going to be going in order from largest in terms of market cap down to the smallest in terms of market cap. But again, we're not looking at penny stocks here, and we're not looking for companies that are going to be up 10 to 15% in the next 12 months. Much higher returns we're looking for. So turning our attention back to SoFi, the thing about SoFi is they get mixed in as just another bank. They are so much more than another bank. SoFi is a lending platform that is gaining a lot of steam, and they're headed towards becoming one of the largest financial institutions in the United States. SoFi is a digital finance company with members having the ability to bank, access credit cards, take out and manage loans, and yes, even invest. To understand more about the growth, I want to look at members. What has the growth been behind that? That is a sign of demand for both the products and the success of their products as well. And taking a look at this slide, since 2021, this is a company growing its member base at a 51% CAGR. That is just extraordinary. So growing your products, growing your member base is fantastic, but can management operate in an efficient manner to where the company makes money? Let's take a look at the financials. Check out this growth here. Adjusted revenue is projected to grow by 30% if the company hits their year-end guidance this year. And right now, they're on a pace at 44%. Adjusted EBITDA is not only growing at a fast pace, but the EBITDA margins have gone from the single digits in just 2021 to nearly 30% today. And third, the company...
I'm sorry, this is too boring, and when something's too boring, it means there's low conviction.
Video for today. Yes, I'm wearing a red shirt, so it blends in with the red stocks that you're seeing here on the screen. But this has been the performance of your favorite companies over the past week. On Friday, we did end the day a bit mixed, depending, of course, on what you own. We have Oracle taking a 5% hit after, of course, the stock exploded after its recent earnings report. But all in all, the market has been much better than expected in September, right? Because September historically has been the worst month for the stock market on average, which also meant it's the best month to start buying stocks. But in this case, we didn't really have that many opportunities. And so let's talk about 3 companies that have seen their stock hit. One, it's Adobe. I'll already tell you right now, it's Adobe. They did report earnings, so we're going to cover that real quick. And the other 2 are Rubrik and Synopsys. If you're interested in hearing more, of course, sit back, relax, hit all the buttons. We'd really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And also a special thanks to Fiscal.ai for sponsoring this video. There's a link down in the description and in the pinned comment. You'll get 15% off. New users will get Fiscal Pro for free for the next 2 weeks. Stock research platform, you'll see all of the charts in the video. They're coming from this platform right here. And we're going to go over a couple of things that were mentioned during the earnings call as well, thanks to their AI feature. So, first things first, Adobe. Report was good, beats across the board, and yet, as you can see, stock doesn't move. Stock is actually still experiencing quite a huge drawdown, even though the last 3 years, of the last year as well, it's down 36.9%, and year to date, the stock is underperforming, it's down 20.8%. It's a company worth $148.7 billion, trailing PE 21.8 times, forward PE only 15.4 times, despite still expected to grow revenue compounded for the next 2 years, 9.5%, EPS 12%. Now, you tell me if this company with this margin profile, with these pricing metrics forward or trailing, is this not too cheap to ignore? Now, looking at the company's financials, we can see that for the quarter, revenue came in at $5.99 billion. That's up 11% year over year. EPS was $4.18 on a GAAP basis, $5.31 on a non-GAAP basis, representing here as well 14% growth year over year. As for the topic of discussion here, which of course is AI, AI influenced ARR surpassed $5 billion, up from over $3.5 billion exiting fiscal year 2024. New AI first products like Firefly, Acrobat AI Assistant, and Gen Studio for performance marketing exceeded the end of year target of $250 million in ARR. This is something that we've discussed before. I always said that this number, okay, is nice to have, but it is extremely, extremely small. Now that we are, of course, not at the end of the year just yet, they already surpassed that, so everything else is upside. It remains to be seen how big that number is going to be towards the end of the year. Cash flow and repurchases, they generated $2.2 billion in cash flows from operations and repurchased 8 million shares. RPO exited the quarter with $20.4 billion, growing 13% year over year. They also told us that the company's focus on agentic AI workflows and solutions like Gen Studio, which has surpassed $1 billion in ARR, growing over 25% year over year, is also a significant factor to the overall growth story. Now, that's not all. They told us that today 99% of Fortune 100 companies have used AI in an Adobe app. Nearly 90% of Adobe's top 50 enterprise accounts have adopted one or more of Adobe's AI-first innovations. Over 40% of Adobe's top 50 enterprise accounts doubled their annualized recurring revenue spent since the start of fiscal 2023. We also have here a comment from Jonathan, Senior Vice President, Marketing and Communications for IBM. By expanding our use of Adobe AI, we've unlocked new levels of productivity and efficiency. In the previous campaign, Adobe Firefly cut content cost by 80% and accelerated ideation from weeks to just 2 days. Adobe has been a key partner in helping us deliver immersive customer experience at scale. We're now getting, of course, way more information from Adobe with regards to their plan to make sure that AI does become a tailwind and not a headwind. And so for now, what we're seeing here is a company where I'm not seeing it being disrupted by AI. I'm not seeing where AI is becoming a headwind for this company. If we're looking here at digital media ARR, this also goes up and to the right. Yes, the growth rates are coming down, but that's mainly because the previous ones were, of course, over year-over-year comparisons that were quite easy to grow this quickly. Now we're going to get back to normal growth rates. And the last thing here is, of course, buybacks. Look at this, accelerated buybacks. As long as this, it's a bit like PayPal, right? It's a bit like PayPal. As long as the stock remains extremely cheap, and as long as the company remains extremely profitable, well, they'll be buying back quite a lot of shares each and every quarter, each and every year. And so, looking at the stock right now, we're still here under $350. I don't own any shares here, but it is one of these names where it might be too cheap to ignore.
It's tough. It's just too boring. We gotta get more sensational. people will be locked in.
What's up, YouTube? Hey, I got our next big play on deck. I told you it was coming. It is here. If you guys are ready to make some money, let me know that in the comments below. Class will be in session, so watch this video and follow it to a T. I'm going to change your life with this one, okay? Listen, our next big play is here. I'm going to show you what to buy, where to buy it, the whole nine, and I'm going to chart it out for you. I can't afford you to miss this one. If you got any losses that you need to make back up, this will do it. If you haven't had no losses, but you just need to make money, this will do it. For those of you that want to get towards and close to your goal, 10K, 20K, 50K, 100K, this will do it, okay? I did this for SoFi. I did this for Palantir. I'm going to do it for this particular play. Let's go ahead and dive into it. All right, guys. I got it pulled up. Without further ado, I am a technical expert. I am a sniper, okay? Typically, I am a 2-hour-a-day trader. I can make anywhere from 10 to 30,000 in 15 minutes. If I let the play ride, I can make anywhere from 50,000 to 100K in a matter of hours. I'm about to show you this particular play, ticker symbol LYFT. Everybody go to this, okay? This particular play, I'm showing it to you now because the setup is there. I don't care nothing else about but the technicals. I am a technician. That's why I don't miss. Let's go ahead and look at this. Hit trade options. I don't care what platform you are using. You get to the option chain. Go all the way over for me to 2027, January 15. Now, y'all already know how Coach play. None of my plays take this long, but I can't afford to see you guys miss. I'm going to change your life. Some of y'all going to get off corporate plantation with this. But one thing I love about this one, we hit over 180% on NVIDIA this year. I did the same exact thing. I'm about to do it for you guys then. This is the important part of being early. Everybody going to join the 100K challenge January 1st, but y'all going to already be in and up 100% by January 1st. Look at these prices, okay? Now this play, everybody write $20 target number 1, $30 target number 2. So you're going to change your life just from here to 20. But this play is going to 30. I taught you guys about Uber when it was $20. I told you Uber is going to 100. Uber is now at $90. Follow these teachings to a T, okay? I'm a technician, so you ain't got to worry about if it's going to work out. It's going to work out. I'm not guessing. I'm not gambling. This is technical, okay? So my probability is much higher than everybody else's, okay? Watch this. You got the strike prices of 17. You got the strike price of 15. I need to teach you this. You know I have a system. If you rock with me, we buy an 80 delta. Let's just go through these. Let's click 15 so I can show you the delta. This delta is 71. That's not bad. This delta is 71. That's not bad, okay? Let's check out the $12 delta, 82. Coach's delta is always 80. This is 82. This is right in line. This is around $7, okay? You can get this at 15. Let's look at 17 just to teach you 64. That is still good. Do not pick a play that don't have these deltas. This is what you don't do. Do not go way up here. Yes, it's going to 30, but don't choose 35, okay? In this particular case, because it's out so far, you can get away with it. But I'm talking about if you're doing plays that you're not following from me, don't go way. That's called out the money. That's too far. You need to be, look how close. Look at the price in the middle and look at the two prices above and below. You need to be in the range or deeper down lower, okay? That's called deep in the money. Or just shoot for an 80 or 70 delta and your plays will hit. That's number one. Okay, so do me a favor. We're going to choose $15 call for this particular play. So everybody hit 15, okay? Watch this. You're going to hit buy. This is a 71 delta. So I already know off top this play going to hit. Off top it's going to hit. Why? Because the technicals told me it's going to hit. So this play will cost you $540 if you want to change your life, okay? So don't ever think you need a bunch of money to get in. For those of you that need to double your money, you buy 2 contracts. If you want to triple your money, you buy 3 contracts. Coach is going to buy, I always buy 100 minimum or 200. That's just how I trade. You don't got to get 200 like me. You can do this just to test my theory out. But I have shown you SoFi, Palantir, Netflix, Meta. My list is long and strong, and I can keep going. Nvidia, AMD, Google, Amazon. I do this. So do me a favor, guys. Get this 115.27. Get a 71 delta on this, okay? This is the $15 call. All right. So that is the play. This is where you buy. This is the strike price you choose. This is the stock you choose, okay? I'm giving you everything. I need to see you win, because guess what? I can't wait to turn up. I can't wait to celebrate your success, okay? Now check this out, all right? Here is how Coach No and does this. If you've been with me for any amount of time, this is not new. You've seen me do this time and time again, okay? Okay, guys, now we about to dive into the charts. We are going to pull up, I have lift on a 1 week time frame. I need you guys to see this. This is where we are at. This is where we going. This is $30 right there. Okay, that is the target that we are shooting for. Now this can go way higher. You got this target right here you can shoot for, and that's all fine and good, but I want to just show you something that's more realistic and attainable. And once you get a taste, you will see for yourself how this is done, okay? So your job is to be patient. Do you see this black line right there? This is how I gave y'all SoFi. Everybody, when I was teaching you guys about it at $7 and $4, this is where it was at. Now it's at above $20, and this is how you have changed so many lives, okay? So we got the double bottom here. We are trying to break this. Soon as we break resistance, boom, we're going to get a break. This is called bump and run. We're going to bump and then run, okay? And that is how we're going to hit target number 1, which is $30, okay? In short term, you're going to have the target of $20 as well. That's going to make you a lot of money just from 16 to 20, okay? But I want you to be ready and in position, because once this go and once our targets are hit, you are going to have a chance for a monster move, okay? So look, let me clean this up so you can see for yourself, okay? Boom. You are going to break this. You're going to come back and test it. This line going to be here, but then this line going to start coming back around to the upside. So that's going to tell us we're going up. And you are going to just slow grind your way up, okay? And then that is how you are going to work your way all the way towards this 60 and 65 to 70 level, ultimately when it's all said and done. I just need you in it to 30 to $20, okay? That's our target. But you get it when it's here. This is where I got you so far. Like, Coach, how did you catch this? This is where I got you guys. Palantir. This is how it was done. I did it with plenty other plays, okay? And then once you learn this, once the play break out, then you start learning where the other levels at to get what's called a rinse and repeat, because it might not ever come back down this low again once they finally break. So then you have new levels to take you to new heights in these plays, okay? So listen, guys, I just wanted to show you how and why we're going to hit the targets I set before you, okay? And I want you to choose the strike price, choose the stock, choose the expiration date, and make sure your delta is correct so that I can ensure that you get the right return on your investment, okay? Listen, I'm going to get you up out of here. If you're ready to make some money, if you got at least 3 to 6 months to spare for Coach, please take advantage of this. It's going to change your life. I do this. I couldn't do it without you, though. That's the one difference. I won't leave you out of these big plays. If you feel like you didn't catch Palantir with me at $8, where you're catching Lyft with me here. Uber is already my place. So I already showed you I did this for Uber when it was $10, and now Uber is 90. And I told you Uber gonna go from 10 to 100. Lyft is gonna go from right here to 20 and 30. Let me know if that's understood, guys. I'm gonna get you up out of here. Listen, if you like this, please share this. We make videos like this every day, so if you like this one, make sure you check out the next one. Remember, most people see the end result, very few consider the journey. Do me a favor, don't forget to subscribe to the channel. Make sure you guys grab some free stuff using my link below, and I'll catch you guys in the next one. Peace.
All right, guys, let's listen to what Felix has to say.
Starting investing at 40 is too late. I'm here to tell you that's not true. In fact, with the right plan, you can still build massive wealth and become financially free. And I'm here to show you exactly how I do that if I was starting my investment journey at 40 years old. If you don't know who I am, my name is Felix, and my mission is to help 1 million people become financially independent. After quitting my corporate jobs and retiring from my business, I've replaced both those income streams with my investing and trading, and I've helped over 20,000 people in their quest to achieve their goal to become financially free. Here's what most people think. If you start with, say, $500 at age 20, say you're starting down here with your $500. This is dollars, and this is 20 years old. Most people think that by, say, age 40, that $500 becomes $2,000. Here is 40. And they think that by age 60, that $500 would have become about $2,500. That's what most people think. But the reality of investing is much more exciting. Compounding takes time, yes. If you notice at age 30, the following happens. So what actually happens is we need to extend our line way, way, way higher. And the reality is that if you start with $500 down here at age 20, what actually happens at age 40 is that we are already up here at $4,000. So our line actually starting to do this, and then the real magic kicks in between 40 and 60, which means that that $4,000 actually becomes $26,500, which means this line basically goes, well, not quite vertically up, but you get the idea. It goes up way, 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 way faster than you think. And this growth path here is assuming only a 10% return on your investing, which is about the average of the last 30 years of the stock market. Now, you can't retire on $26,000, obviously, so how do you get to $1 million?
$1 million.
If you started investing at age 0, you would need to save only $13 a month to have $1 million at age 65. Say you're 20. Maybe again, that isn't you. Maybe that's one of your children. Well, tell them about this. You only need to invest $188.33 per month to get to $1 million. Now, let's say you are 40 years old, which is the title of this video. How much do you need to invest? Here's the really interesting question. It is $1,044.33 per month. That'll get you to $1 million. Now, if you're a little bit later to the party, say you're at 50, I know some of our viewers are 50, $2,870. If you're at age 60, you can get this on the piece of paper here, then you need $13,519 per month. So starting out at 40 years old versus 20 or versus 0, it's harder because the time value of money is so great. But it's still possible with a large enough income and dedication. Most people can actually invest $1,000 a month if they really put their mind to it. And waiting to figure out until you're 50, well, it makes it 2.8 times harder. And waiting until you're 60 is going to be impossible for most except for very high income earners.
All in black.
So now we know how much money we need. So the second step is therefore, where do we put that money? you want to put your money into tax-advantaged accounts. You want to start off with your 401k if you're employed. What do you want to do with that? You want to max out your 401k up to, and this is really important, write this down, only up to the point to which your employer matches your contributions. And the reason for that is your employer is giving you free money, you don't want to turn that away. But 401ks are also not great instruments. Most of your money is going to go into some high-fee mutual fund or a certain selection of pretty high-fee ETFs. So it's not the greatest place to invest your money. You've got very little control over it, but there is free money to be had here. And we don't turn away free money. And once you've maxed out the employer matching contribution, you go to the next level. The next level is going to be your Roth IRA.
I still don't get the difference between Roth and the traditional IRAs.
No, it's okay. A lot of people get confused by that.
What's the beauty of a Roth IRA? Let me tell you this. Dividend taxes in a Roth IRA are 0. Capital gains taxes in a Roth IRA are 0. And what that means is that compounding chart we looked at the beginning, well, we grow that much faster because we don't lose any of the gains that we start with. Now you know how much money, now you know where to put it. The next question is, what stocks do we put it in? The starting point is a low-cost index fund, also known as ETFs. They will typically mirror an index like the S&P 500, which will give you, at least judging by the last 30 years, that 10% a year. You can buy one on the NASDAQ and so on, and there are also smaller ones on individual sectors. I would stay with the big boys because you're actually doing this for just broad market performance rather than betting on individual stocks. How about individual stocks, though? Your question you got to ask yourself is, are you willing to put in a little bit of work to learn what makes a good stock? The answer to that is, I've got 0 interest in this. I'd much rather scrub the kitchen floor than you go 100% into ETFs.
Anyone? The Great Depression passed the... Anyone?
I personally think it is much easier than people think to actually pick great stocks. I'm going to go into a little bit more detail on that. So yes, you could buy individual stocks. Now, the risky thing with individual stocks is that they move a lot more than index funds, and they could therefore hit you pretty hard. Now, what I see most people doing, especially people who watch social media, like what you're watching here right now, they don't just buy individual stocks, they buy growth stocks because you want to catch up, right? Now, what's the problem with that? Well, growth stocks are risky. I could give you a whole long list of stocks that are still down 60, 70% from the COVID highs, and a lot of people are still holding on to them, and they're delaying their retirement. Right? What I do instead is I do focus quite a bit on growth stocks, and we'll look at the split in just a second, but I don't care about the growth part. I just care about where is the money flowing. So what I look at is money. Where is institutional money flowing? My best performing stocks so far this year are things like Avis. Avis isn't particularly exciting as a stock, but it's made me like 90% returns. It's things like gold miners, exactly boring businesses. But again, they've made us very outsized returns. It hasn't been the Nvidia or the Tesla or the Palantir or any of those. It's been businesses that I find based on rules that I've actually learned from my time in banking and then my mentors over the last 10 years. You want to learn that exact strategy, by the way, it's a 3 steps.
All right, folks, let's hop into a little breakdown here because gold is great, but I think there's a little bit more opportunity in some specific companies, specifically this rare earth company, AREC. So here it is. It's not actually an OTC company. it is extremely low price. It is extremely illiquid. And just to see exactly how liquid it is, trades like $5 million, $10 million a day. So the most you can take is like $1 million position. Okay, so this isn't going to satisfy all of our viewers, but if I know our viewer base, this is going to satisfy 95 to 97% of you. Okay, which is what we got to do if we're going to get some views, for better or for worse. All right. We got to give the people what they want. If you do have any comments, chats, go ahead and drop those down below, just like Jay is doing in the YouTube. If you are over on X, head over to the YouTube to get those comments in. I will see those, but we are going to be taking a look at ARAC. If you have any comments on ARAC or on rare earth stocks, do mention those so that we can collaborate and conspire to financial greatness. All right, let's take a look at AREC, American Resources Corporation. I think this could be the next big, or the final, Trump rare earth stock. Okay. I don't know exactly when it's going to happen, but nobody knows when it's going to happen. I will say that this is pretty interesting. It's a $2 million defense award for rare earth refining. This was right on the 9th here, so this is right here. Okay. Pretty cool. So let's jump in and do a breakdown. Trump's final rare earth stocks may be about to break out. I'll give you the ticker right now. It's AREC, American Resource Corporation. It is what it sounds like. It's a rare earth company headquartered in the US, publicly traded on the NASDAQ, and they just got a $2 million government project award. So let's take a look at how the stock responded and what exactly is going on quietly. So here's the chart. This is the move from that $2 million Department of Defense award to re-element. So this is the name for this award. And when we look at the news here for American Resources, here it is. It's this $2 million defense award right here. This is its business unit, re-element, and it's for expanding domestic refining capacity for rare earth elements used in defense applications. This is great news for us as investors because it's a rare earth used for defense. And if you've been following, or if you're following right now, stock moves. MP Materials got a $400 million award from the Department of Defense. MP Materials is a rare earth company. This was the move on that $400 million award. It went from 30 to 60. Okay, almost tripled. It is leveling off here. It's actually looking pretty interesting as a buy, depending on how it acts over the next week. I think an even more interesting buy is American Resource Corporation with that more recent 2 million award. Here you can see the move more granularly. This is the volume. This is something to be aware of. The volume is about 5 million on that day and even less on other days. For a $2 stock, that means it trades $5 to $10 million a day. The most you can take is 10% of that volume. So the most you could put in this stock is 500 grand to $1 million, depending on when you get in and depending on your risk tolerance and the size of your portfolio as a whole and your net worth as a whole, because you don't want to get stuck in the stock and not be able to get out. Now, for 95% of the viewers here, you are not having to worry about that. Your position is not even going to be $500,000. So, the fact that American Resource Corporation got this 2 million award, it is small. It's not the 400 million like MP Materials, means that $2 million can move the needle for this company, and it can move the needle for your portfolio because this is an inexpensive $2 stock. And if we zoom out, this stock has gone down, okay? This company has gone down. There's no hiding it. However, on the monthly chart, we have some important technical levels here. I've given you the fundamental reason, the award, and Trump's focus on rare earth independence from China, okay? This is the technical level now, 250, and this whole $2 level, which goes back to August of 2 years ago, okay? There are unlikely to be a lot of people that own the stock from 2 years ago that have been holding the whole time. They've probably sold since then. So there are not a lot of bag holders in this stock. And if they do hold it from 2 years ago, they're probably not the kind of investors who check their portfolio every few weeks, or definitely not every few days. So we like the sound of that as investors who are a little more savvy. If you're watching this channel, you're savvy, because it means we have the opportunity to get in on a smaller time frame. Doesn't have to be on this small time frame. We can zoom out a little. And we have a very close risk level of $2. You risk 5-10 cents. Check your phone once a day. Make sure you haven't lost more than 10-20 cents. And put an amount of money in that you feel comfortable losing 10 cents per share. So if you put in 100,000 shares and you lose 10 cents, well, you just lost 10 grand. So that's your risk, with the opportunity being up above 250 and beyond. Again, because there are not bag holders, there's a lot of blue skies. So that's the technicals. That is the fundamental, the rare earth play. And for the true value investors, let me tell you a little bit more about what American Resource Corporation can have as a growth target and what this award means, okay? It are being considered in the national security defense supply chain, okay? That's a huge, huge deal. They do have state funding as well, nearly $1 million. And if we go even higher on this summary from Chat GPT, they do have this certification from the US as well as the Canadian Department of National Defense. Not a purchase contract, just a certification. Canada's market significantly smaller, even if they get a government agreement with Canada. However, it presents a diversification of growth opportunity. So if another company swoops in, if MP Materials acquires some small rare earth company that is not American Resource Corporation, American Resource Corporation can say, hey, Canada, do you want some of our materials? We still have everything ready to go. We just need a buyer. So this is a company that is making moves to be marketable and to get some serious government contracts, okay? And based on the recent stake in intel from the government, this government is making unprecedented moves that we can capitalize on, no matter how we may feel about government and business ties. So that's all you really need to know for this company right now. I've given you the price levels. Watch this stock over the next 2 weeks into early October, if not by October 1st, and let me know if you have any companies you want to take a look at. So, I'm pretty sure I just did that entire demonstration without looking at the chart, which is incredibly impressive. But what that means is we're going to be doing it again. So, here we go in faster mode. This is the beauty of a 7-minute video. We can do it again. Trump's final rare company that could make a massive move is American Resource Corporation. AREC is the ticker. It could get a grant the size of that $400 million that MP Materials got, that caused MP Materials, a rare earth US company, to go from 30 to 60, nearly to 90, 200% in just about a month. Could AREC be the next 200% mover? Let's jump into the chart and the fundamentals to make a decision on if this is the best and the next Trump rare earth stock. Here we go. This is where the stock is trading. It's near that $2 whole dollar level, and there's space up to $2.50 where it can break out and find blue skies after that. Sure, it's gone down a lot, okay? But if we look on the monthly chart, most of these people who bought back 2 years ago, they would have sold by now, okay? So there's no one who's going to be selling who looks at their phone often, their portfolio often, if this stock breaks out. And we like the sound of that, okay? No sellers mean everyone's making money and people keep buying. This level is important, 220 from back 2 years ago, but even more important is 250. And above that, 350, okay? Those are the price levels to look for. If the price gets there and rejects, you might want to be a little cautious. If it blows right past, people like the stock. Now, what is this stock doing? Well, they are getting government contracts. And they did recently get $2 million from the U.S. Department of Defense on September 9th. And that caused a movement in the stock. If we look at the stock movement right here, it was significant. It did move up right here from 180 to 210 on that $2 million. And $2 million is a lot for them, considering that this company only trades about $10 million a day. So if you put in more than $1 million in this stock, you might have a little trouble getting it out on a single day. Most people watching this video aren't going to worry about that, but it is important if that's what your plan is. They do have this about $1 million matching grant on the state level. So they are a little bit diversified in that sense. Now, one company that is related on a rare earth category is Lithium America. And I want to discuss this company because I've been screaming from the fences about Lithium America about a year, 3 years ago, a while ago. And now I'm screaming from the fences about rare earth stocks again. So let's talk about what happened with Lithium America, because everyone was very excited about this company and it absolutely unwound. Okay? So that's why you have to have that $2 whole dollar risk level. Basically, Lithium America got this $2 billion loan. Okay, they were going to make lithium, well, mine lithium for electric vehicles, battery storage, etc. Okay, that's great. And what happens was there was a lot of permit risk, and there was also a little bit of sort of pushback environmentally, as well as from some native tribes. Okay, and you can kind of be cautious with future rare earth companies with this company as the backdrop. Okay, it's not like they're having trouble getting investment. Okay, this company is well on the large investors radar. $250 million is no joke. It's just that unfortunately there were some cost overruns. It costs a lot to mine, and this is just the reality of some of these majorly hyped rare earth stocks. Okay, so I'm just being real with you. Okay, GM committed nearly $1 billion to the Lithium America project. Okay, so this was a huge story that maybe you would have heard of. And if you haven't heard of Lithium America, you may have heard of lithium and lithium batteries. And Lithium America was supposed to be the poster child for lithium batteries. Okay, Thacker Pass was in the news. And of course, there were some legal and permitting, as well as environmental indigenous tribes risk factors. Okay, so I guess you could say, that was under Biden. All right, so let's see what's happening here under Trump. Okay, it is what it is. Trump likes money more than he likes the environment, and this company's been going up. Okay, there's been other rare earth companies going up as well. We talked about MP Materials as the largest sort of $400 million Department of Defense award. And $2 million is just a drop in the bucket to that. But imagine if they get a 50 million grant or something big like that. This company could go from 2 to 10. I'm not saying it will. I'm just saying MP Materials did go from 30 to 80. Okay. So with a tight risk level, there's a lot of opportunity here. Now, that's really all you need to know. If you want more stock ideas, hit that subscribe button. If you want to chat about your portfolio, head over to stockscommunity.com. You can join for $25. And you'll also be in a group with a verified $9 million trader. So take care. Hit that subscribe button if you want more ideas. Let's see what Felix has to say.
System, it's pretty easy to learn. There was a free masterclass I put out for you, which gives you a lot more detail about what we're talking about here. And if you want me to show you that 3-step system for selecting those stocks, just watch that free 15-minute masterclass at felixschwenzer.org/get-free, because it's our mission to make you get free. Now, the most important part to all of this, particularly as you're thinking about retirement, particularly as you get closer to retirement, is to protect your portfolio and your money. You want to be protected from the crazy ups and downs in the market. Tariffs, COVID, 2008 housing crisis. There's always something you didn't see coming. And if you want to retire at a certain age, well, risk management becomes your primary concern. In addition,
here we go.
You want to have
screen, huh?
an emergency fund. And the whole purpose of the emergency fund is that Say another 2008 happens, the market tanks, and exactly that moment you need unexpected money for something. You don't want to be selling your stocks at that point because you're going to be destroying a lot of wealth.
Ticker.
How much did we lose today?
Ticker.
$1 billion.
Generally speaking, a good measure of that is 6 months of your expenses. And you don't have to have that sitting there in cash because cash will just go to zero in terms of value. You can put it into a high interest savings account. They won't pay you that much, but they still pay a bit better than nothing. You could also put it, if you're a little bit more into this, into short-term government bonds. So again, they're going to pay you just a little bit more than perhaps the bank does. But your real question is probably, how do we split up this pie? This is your money pie. How do you split it up? Well, I'll tell you how I split it up, okay? So, and you might be surprised by the outcome. What I do, I take half of the money and I put it into a couple of ETFs. Why do I do that? Makes my family sleep better at night because I'm not actively managing all my money. That's the simple answer. I think I could do better than the ETFs, but I'd rather be happy. The second thing is, you're going to want to have a little bit of that emergency cash down here. And then for me, the rest of it sits in individual stocks. Now, I want to tell you a little bit more about how I pick those individual stocks, because I think that's the real value add here. Stop thinking about stocks. What you want to be thinking about is money. You can see where the money is flowing in the market. Let me give you an example. Let me give you 2 stock charts, and I'm going to just draw these crudely here for you. One looks something like this, and the second one looks something like this. Which one would you rather buy, A or B? This is A, this is B. Put in the comments down below. I'll tell you what they are. This here is semiconductors. The ticker symbol for the ETF I'm looking at here is SMH, and you can check my drawing skills. And the one on the right here is the very, very sexy sector of home builders. Nobody looks at home builders. Everybody wants to buy some tech thing. Ticker symbol for this is XHB. What do you see? Well, money flowed into this sector here. The money went in here, right? And then money went in here, money went in there, money went in there, money went in here. A lot of money is poured into that already. What about over here? Well, we've just started. So to me, I like to follow the money flows. And I believe the money is going to basically be flowing in that direction because this here on the right, our home builders, is a new opportunity. Falling interest rates and so on are a factor to that. Now, this isn't actually about home builders and semiconductors. It's just about everyone's in the latest sector. Everyone's talking about all the headlines are about, but nobody knows how to find the next sector. And there are plenty of these. At the moment, it's home builders. I'm buying oil services companies, all these random sectors that nobody really looks at. And that's where I get my actual returns from. Now you're thinking, yeah, but what stocks do I buy? Do I buy the ETFs? No, I don't. What I do next is I look for the best stocks in that sector. Now, let me just give you 2 metrics that basically tell you what the best stock is. The first is something called gross margin. What's a gross margin? Just how much money they're making when they sell something. And if you have a very high margin, it means that it's very difficult to replace you as a supplier. So the guys who make these pens, well, I can tell you, their margin's going to be pretty low because I can buy these kind of pens from about 10 brands. But if you're making something, say your Visa card, it's very hard to replace Visa card because to set that up would be almost impossible. So that's a company with a high gross margin. Their margin is something like 98%. And the second thing we look at is return on capital invested. You can see I'm running out of paper because I wanted to give you more value than I had paper for. And return on capital invested, ROIC, is often the acronym. What does it tell you? Well, it tells you if the company invests $1,000, how much money do they have 1 year later? Now, a good company will have maybe a 20% or higher return on capital invested. And what does it mean is, well, say it's 20%, right? Say they make 20% on that. Well, next year, that investment means it is now $1,200. And if they keep doing it, well, in the year after, it's going to be how much? It's going to be hard for me to do the maths here. That's another $24 on top. So that's $460. So this is year 3, right? So in year 3, they've almost made 50% gains on that money, and you keep going with the compounding, you can see why those companies make a lot of money. If you want to learn this in a bit more detail, I give you the 3 actual steps and walkthroughs and rules, including the risk management. Then jump into the free masterclass I prepared for you. It's only 15 minutes long at felixfriends.org/get-free. And also check out all the news and all the nuggets and all the stocks that I find, that I look at, that I share with you guys on this channel. So just hit the subscribe button to that, and I hope you got some value out of this, and you're going to continue to learn and expose yourself to more information, more knowledge. Focus on the strategies, and your retirement is going to come along much faster than you think. Thank you for watching.
Okay, well, I think we got to listen to some more Chris Sane. Let's see what he's got going on here. The motivation is off the charts. The passion is powerful. Let's get inspired.
What's up, YouTube? Class will be in session today. You guys have spoke. Coach has listened. You guys said you like the teaching type videos. So you already know we got to cook today, guys. Listen, if you made money today, Lyft, UNH, anything Coach has put down, I want to hear about it down in the comments below, man. I'm so proud of you guys for just understanding your assignment, running the plays we call in the huddle, but you guys, more importantly, are trusting the process. If you made money, let me know. Listen, as always, please make sure you like and subscribe. Help this video get at least 1,000 likes. And without further ado, let's go ahead and dive into it. Guys, it's all about Moomoo, okay? If you haven't got up to $1,000 in NVIDIA, you need to do so, okay? Get this platform. On top of that, you can paper trade, so you can follow along with all that I'm going to teach and show you until you're ready to try it on your own with your real money, okay? Speaking of real money, look at this. This is our UNH play. Let me know if you guys remember this. I told you we were all getting in this together. We bought this. We put it out to January 27. All the same steps I just did for you guys, and I'm going to show you guys momentarily with Lyft. But check this out. Up 183%. This is the equivalent to what our NVIDIA play, which I put you guys in January 1st, is up. So I want you guys to think about this on the 100K challenge, how you can have several plays that do extremely well on your behalf. Okay, so think of our NVIDIA play. Think of Wolf. Okay, think of UNH. Now currently sitting up here through the roof when we got it at 268, 290, the low 300s. Y'all remember them prices? Now looking to comparison to where it's at, sitting up here at 347. Okay. And then Lyft is about to do it next. Because I'm a technician, guys, these things can happen consistently. They can happen time and time again. You just got to be along for the ride. You just got to trust the process, and you got to let our targets be hit, okay? And so long as they don't throw my plays off, whether it's the president, whether it's Jerome Powell, long as they don't come and do something, I can almost, with so much certainty, guarantee you guys we gonna get busy. But check out UNH, guys, sitting at 347, and I just want to say major salute for those that got it when we talked about getting this at 268, 280, 290, and now we're sitting up here. This is the power of that up over 180%. And this is what I be trying to say, man. I can change your life. I can help you change your life. The stock market can change your life. Learning to trade options can change your life, because you can't
Just
do
gonna
this
check
every day.
out this other
You
rare
can't
earth
do this
play.
on your job, okay? And so listen, man,
Well,
we gonna keep cooking, okay? So listen,
not really what it
next I
is.
want
It's
you
uranium.
guys to everybody get inside your Moomoo, okay? Go sign up for Moomoo. Link is down in the description below. Get your free stocks from Moomoo, and then put your cash, aka dry powder, inside our 8% cash growing account, okay? So while you wait, you're cooking. All right, now check this out. Okay, we have Lyft sitting at $18.39. I just was talking about this at $16, and I want to show you just how this is done. But look at this. Look at my screen, okay? Now, we bought options on this together. For those of you that is using Moomoo, okay, you want to hit the options bar to make sure you open the options chain so that you can pick our play. But guess what? You got to go out to 2027. But here's what I want you guys to do today. Go back to chart, okay? And everybody say this, two-prong approach. You need to have the shares with Coach if you want a 100K challenge, and you need to have options with me, because when we hit the target, I want you to take profits, but you can always let your shares continue to run alongside a couple runners you may allow to run in your options. Let me know if that makes sense, okay? So everybody go to chart, and then look down here at the bottom, in case it don't show on the screen, it says trade, okay? Now Lyft is only sitting at $18. Do you guys have $18? Okay. If you have $18, I need you to at least look at everything here. The ticker symbol is Lyft, Lyft. Okay. The session is rated regular trading hours. Okay. We can look at where it say price at. Okay. You see how it say 1835, 1834. We can change the price to what we want. You know, Coach don't want you guys buying high, but let's just say you put this at $18 even. Okay, boom. All right, that's what you would do, or you could just punch it in. But here, how many of you guys got $18? Okay, you will put the one there. Okay, I want you to ultimately get at least 100 to 125 contracts. So let's go ahead and do that today. Okay, if you get 100, how many of you guys got $2,000? 100 gonna run you around $1,800 to change your life. Okay, I already told you this play gonna double. If you do options, it's going to quadruple. Okay, options is a law of large numbers. It's 100-fold, so it's 100 times faster than shares. But Coach wants to teach you how to invest and build wealth in the market. It's more responsible, it's more safe. Okay, especially when you got a quality company, a quality balance sheet. Fundamentally, they are sound, okay? Even though I told you guys this ain't my cup of tea, but I can never look away from a good chart when I know the charts and I know when moves are going to happen that can help you. So look, and if we get 125 shares at least, then that's $2,250, okay? At least do this for me, guys. Somebody asked me, Coach, why do you have us buy 100 shares? Because ultimately my goal is to teach you, which I do every day on coaching calls, is to teach you covered calls, okay? And that allows you to make money off of owning the share, which I want you to be investors first, traders second, okay? So if you get 100 or more shares, you don't need the shares to buy options, okay? You can just buy the options, just like we did the other day. But I'm saying lateral to that, I want you guys to have the shares. Let me know how many shares of Lyft you got. You at least need to get 100. Start with 1. That's milestone number 1. At least get 1 share. Then the goal is 10. Then you got to get 25. Then you got to get a total of 50. Then you need to have a total of 75 en route to 100, and then ultimately 125. Do you guys have that? And you should have done this for SoFi. You should have done this for AMD. We did this for NVIDIA. We did this for Netflix, Meta, Google, Amazon. Let me know if you guys get what I'm putting down, okay? But I need you to do this. So now we have signed up for Moomoo. We got the free shares. We got the money. Now we can go buy assets that can make us more money. Let me know if that's understood. This is only going to run you $2,250 for a chance to double your money, okay? And if you can do more than this, you do more than this. I often get up to 1,000 shares, but I follow the same principles. When I call those prices out that I give you for options, those are the same levels you can go with buying your shares at too, okay? And then boom, if you can do one or the other. You can, on a rinse and repeat, buy the shares next time, or as you take profit, as the option go up, when you take profit, I always want you to have somewhere to park it so you can put it in the actual stock, okay? They're not tied to each other. You can trade one and invest in the other, okay? You can let them both go up. You can sell one and keep the other one and let it keep going up, okay? And so that's what I want you guys doing today. So now we should have the shares and we should have the option. Let me know if that's understood. Everybody go sign up. Make sure you got this. Let me know in the comments below if you got signed up for Moomoo. I'm going to have the information down in the description for you to do so, okay? And then now I know you got the right platform, because people say, Coach, what platform should I get this in? You got the right platform, and then you have also the ability to paper trade, just so you can, I want you to, don't ever just go with what I say. I want you to try it. I want you to test it. I want you to let it be proven to you that what I'm teaching you works. So you be like, man, Coach, I did this. I did your trade with a paper trade, and I hit. Okay, so then now you got confirmation that everything I told you from the levels to the targets were achieved. So then when you come and join the money team, you know what you're doing. You can do all of that inside of Moomoo. But look, speaking of that, look at this. Go to options before we get out of here. Do you see right here where it says September? Okay, this is what you would click to get to the dates. Remember, you got to go all the way to January 2027. You got to go to the $15 strike. And then this is how you would just hit buy from here. And then boom. All right. And so we already had this. We are already up. But what I tell you, this is going to $30. So you're not late. Okay. It's not too late. Ideally, you want to get on a pullback. Okay. But regardless of that, if you dollar cost average, if you manage everything, you don't have to be hasty about it. Everything I tell you going to come to pass. Everything I tell you is going to come to fruition, and every target I give you will be hit. I need you guys to just trust the process, okay? Listen, guys, hopefully this was helpful. I want to show you these different things on your various platforms that you use. Today was all about Moomoo. It will always be about Moomoo, and I want you guys to make sure you download that app to make sure that you are taking part in the plays. We buy shares and we buy calls on these home runs, our next big plays. We do that same approach, okay? This is how I help you supercharge your wealth building process. Listen, guys, keep up the good work. Everybody be in the Discord first thing in the morning. We got PPI coming out, so it might move the market, okay? We got CPI the next day, so be on guard for that. But I don't care. Once I see the numbers and the report come out at 8:30 and I see we either gonna crash or take off, I'll have the levels ready for you inside of Discord so we can get busy with the SPY and Tesla. If that sounds like a plan, guys, I see you guys in there first thing in the morning. Listen, we make videos like this every day, so if you like this one, make sure you check out the next one. Remember, most people see the end result. Very few consider the journey. Do me a favor. Don't forget to subscribe to the channel. Make sure you guys grab some free stock. Use my link below, and I'll catch you guys in the next one. Peace.
All right, guys, let's take a look at uranium. Love Chris saying, love this uranium stock even more right now. So this is what I see going on here, okay? Essentially, this stock looks good technically. Very good technically. So Why does it look good technically? Well, the earnings kind of earnings per share actually was lower than a year ago, but they have more revenue in an important segment. And if we look at other nuclear stocks, they definitely look interesting, with Oklo doing the best. So, is there a connection there? And as far as levels for what about somewhere around 220-ish, and then mid 250. I mean, it's hard to say exactly, obviously, otherwise we know exactly what to do. But I do think there's some type of connection with OKLO, the nuclear stock, because that OKLO stock is going up right now. And that's pretty big deal. It's got to be some type of letters of intent for Oklo. There's some type of connection between this uranium stock, LEU, and OKLO, because they're both going up. It could just be that they're both in the same, like, category technically, like something to do with some sort of chart situation, but I think it's gotta be something different. But here's the deal. Oklo went up, NNE did not, SMR did not. Okay, LEU is going up. And there's got to be a reason. So okay, let's jump into a little breakdown of this. I think it's an important time to be talking about nuclear again. It's not always an important time, but it is right now. And in particular, this is what's going on. Okay, there's a higher margin for LEU because they have that HALEU type of uranium. Okay, that's what's going on. So let's jump into a little breakdown here. And yeah, we can get right to it. All right. If you guys do have questions, comments, tickers, you can drop them in the comments during the breakdown. I ought to be able to see them. It's pretty much how this works. But I'm also only human. Okay. But I'm pretty sure I should be able to see them. Let's literally the whole point of this stream situation. I've hit the free plan. Okay, yeah, I know. I don't want to pay for ChatGPT again. It will make me reliant on robots. All right, let's jump into breakdown. LEU is the stock. There is some important analysis, and it's in particular on this margin increase. So that's what we want to take a look at. It's right here. But the chart also looks amazing. So let's hop in and listen to that. If you are just joining us, did just put out a video on Trump's final rare earth stock. Already did his next one, but I think this will be the final one that is the most impactful. And this is what it's all about. You can check it out here. Trump's final rare earth company that could make a massive move is American Resource Corporation. AREC is the ticker. It could get a grant the size of that $400 million that MP Materials got, that caused MP Materials, a rare earth U.S. company, to go from 30 to 60, nearly to 90, 200%. So that's the stock. Do jump into that. And I want to discuss this. We'll be taking a look at what Chris Sain is up to as well. Okay. He does have some other stocks that we want to talk about here.
YouTube, listen, family. You guys is ready for next week. If you're ready to make money next week. We need to be making incremental progress. When we take a step back, that's a time to reflect and make adjustments, okay? Do not think you're going to figure this game out in one day. It took Coach 2.5 years to reach a level of mastery that I even feel comfortable being in a position to teach, okay? So each and every day, I'm going to show improve, but I'm going to also impart.
Okay. Love the inspo. We do have some information here that I think is pretty useful here on this uranium name for Monday. So that's what we'll be looking at very shortly. And we're also going to be looking at the ticker. So let's jump in right now before I play some other loud noise. There's one stock that is about to break out. It is a uranium stock, a nuclear category theme stock. The ticker is LEU. You're going to want to take a look at this uranium company, LEU, very soon. There's a lot of government ties and a significant revenue increase in a very important segment of their business. So let's take a look at what the company's up to. We'll take a look at this gross margin increase, the government contract that is on the precipice of making this the next Oklo, and the stock right here, okay? Why am I saying it's going to be the next Oklo? Well, if you've seen nuclear stocks, these are the nuclear stocks. OKLO, that's Oklo, went from 20 to 80 in just a handful of months. Could LEU quadruple again? It could, okay? I think this move is driven by OKLO. And in particular, I'm saying that not just because they both went up since the tariffs, but because this is a low price stock. This is a high price stock, and it's still having an incredible percent increase. So that's extremely rare to find, okay? 400% increased stocks, and they're in the same category. And I think they are connected, okay? I think there's a linkage here, and I'll tell you why. There's two other nuclear stocks. There's this SMR, this small nuclear reactor SMR stock, which has been going sideways for the last couple of weeks. And then there's NNE, which has also been going sideways. Meanwhile, OKLO is going up here, okay? LEU going up as well. And I think they could both break out in the near future. So let's jump into some fundamentals, what the company is, why we're even talking about uranium. We're talking about uranium because essentially what's happened is we have this huge AI bubble, which is leading to this huge data center bubble, which is leading to this huge energy bubble, which means we need to generate 10 times more energy than we can right now. China was able to bring on nuclear plants way earlier than we even started getting the idea to do it. Okay, we are in an administration where this kind of business and building can move forward at a breakneck pace, okay? And I think that's why there's some euphoria in this uranium sector. Specifically, this company, Centrus Energy Corp, LEU, on the New York Stock Exchange. This is what happened, okay? This is why this gross margin is so good here, okay? Leading to the chart to be so good. The gross margin increased, okay? About 80% increase. That's pretty incredible. So even though the revenue overall went down year over year, the stock's going up because they're getting into these high margin government contracts. These are the government contracts that Palantir is trying to nibble at. Palantir is getting them. This is the type of contract that Anduril, well, actually, the Palmer Luckey, he's sold Oculus to Meta, to Facebook at the time. Anduril hates these type of contracts. These are the cost plus type contracts that big companies like Lockheed Martin have just been cash cows for the past decades, okay? And LEU is getting that contract. So no matter how you feel, about the type of contract, the fact is, as a stock investor, it's super profitable, okay, to have a cost plus contract. It's high margin, and a substantial portion of the revenue decline was due to lower sales in the low enriched uranium segment, okay? LEU, that's their ticker. That was initially what they're all about. However, okay, the technical solutions segment, primarily driven by the high assay low enriched uranium, HALEU, operation contract with the DOE, saw a 48% increase in revenue. Okay? And here we go. Here's the kicker. This segment operates on a cost plus incentive fee basis, ensuring more predictable and higher margins. Okay? Can you think of a better collection of adjectives than more predictable? I guess more is I don't know what that is. And is that an adverb? Somebody correct me in the comments. And higher margins, is there anything better than more and higher? Okay, look at this chart. Okay, enough gobbledygook. You don't have to look at my desktop. This is the beautiful, beautiful opportunity right here. We have an earnings per share that's actually lower than a year ago, but accelerating revenue increase in the most important category that has room for massive growth. So you're getting this perfect storm where you can get in on a stock where its greatest potential revenue category hasn't exploded yet, but has increased. And so for that reason, there is buying activity. But because the revenue actually declined year over year, there was initially a sell-off where people are like, I don't want to be in a stock that it doesn't have revenue increasing. It's like, well, fine. If you want to get in only stocks that have increasing overall revenue, then get in some speculative penny stocks that double their revenue from 2 to 4 million and then have this euphoric jump and then just sell off. Like, we don't want those, okay? We want mid-growth stocks that just went from 50 to 200 and can go from 200 to 400, okay, in the next 6 months. But even more important than all of those, insane, unsubstantiated price targets like analysts like to give out. We're not analysts, okay? We're traders, investors, and we can put on our trader hat for a second and say, look, it's very close to the $200 level. That's a whole number. People are going to recognize it. It also goes back to this left side peak over here in June. And we do have this blue sky above 270, okay? And if we look at a 5-year chart, this thing is a huge growing category. Uranium, in particular, that HALEU, high assay, okay? LEU is the ticker. And its brothers, Oklo, and SMR, and NNE, they all have massive volume. Oklo is the most significant one, okay? Particularly in the past few weeks. And we can see that on the chart right here. People are getting positioned in Oklo. LEU is going to go with Oklo, okay? You heard it here first. And if it doesn't, you can cut it very close to this $200 level, okay? If you put 10,000 shares in here and you risk $20, well, what did you lose? You lost 200 grand, okay? And if that's your whole savings, if you're not a millionaire, multimillionaire investor watching this, looking for that edge to get your portfolio up above 20 million, up above 30 million, if you're a mom and pop Robinhood investor, if you're a 401k long investor, if you're a Roth IRA investor, if you put even 100 shares in here and you lose $20 per share, you lost 2 grand, okay, on a stock that has upside up above 250 and beyond, okay? Last value talk for the value heads, because I know they're out here, okay? Why is Oklo leading right now? Well, they had this recent agreement, okay? It's non-binding, but it is with a data center company, okay, to supply a lot of power through 2044, okay? This is according to Reuters. And there is a race, okay? That headline from Reuters is being played out in the charts, and we're seeing SMR and NNE. NNE has been the laggard for a while now, for months, okay? SMR was sort of leg and leg with Oklo, and right now, Oklo is just running away with the small nuclear reactor title, okay? And there's nothing small about this category, okay? Nuclear is coming back. The AI technocrats, the tech lords love it, and ChatGPT just secured a $300 billion. That's not a misstatement. $300 billion agreement with Oracle. They're going to spend $300 billion on servers to run their AI models. So, are we in a bubble? Sure. Does it matter when it's fueled by debt and when GPT has billions of dollars in revenue and a $400 billion in increasing valuation? No. Is there a huge trickle down to nuclear and then uranium names? Yes. This is the stock to look at. Those are the levels. And I will see you in the next one. If you like these stock ideas, hit that subscribe button down below. If you want to chat about your portfolio, if you want to talk about stocks to buy, head over to stockscommunity.com. You can join for $25 for 7 days. There is a verified $9 million trader in that community. I'll be in that community. You can talk to me. You know, if you think it's worth it, check it out. Let's see what Chris Sane is up to.
Into you guys so that you guys ultimately come way better than me. That's the goal for me, okay? Speaking of that, Lyft will be one of our upcoming plays. I'm going to keep teaching and showing you it across multiple platforms, Moomoo being one, Robinhood being the other. I want you to have it in shares and in call options so that you hit this home run, okay? I need to show you how it's done, not after the fact. I need to teach you about plays before they happen, before anybody know about them, and then boom, we knock it out the park together. We family, so ain't nobody getting left behind. We eat together. Speaking of eating together,
let's get you that video on Chris.
This is Jason Ricks. Go find him. Go level him. Go get him in the Discord. Go show him some love. He sent this, guys, and he made my entire week. Because when you guys have your light bulb moments, there's nothing like it, okay? He said, Coach, the power of 25. He said it better than I say it. I always try to tell you, man, like, guys, y'all don't need a lot of money. Don't let these people make you think you need so much money to get in the stock market, guys. I just need you to know you can do a little with a lot. You can see what's possible, and then when you get more, you now know you can do more. But don't not get in because you only got a little. Watch what this $25 do. He said, Coach, we got to spread the word. I bought a $25 TSLL call yesterday. So for the money team, shout out to the money team. We did gold this week, and we had TSS and we had TSL, okay? He said, I let it run till this morning. For God's sakes, people, it's only $25. This is, again, I'm trying to teach you guys a way to be in the big plays, but the cheaper version, okay? You are to make money in both directions, so you should have also had this when the stock was going down, too. All right? So he said, this morning I sold it with a 9, let's go. You know, around here, the goal, if you with me, we make $100 a day. That's the standard. $400 a day is the max end of that, but at least a minimum $100 a day. So look at this. He sold it with a $98 profit. He said it was at resistance. So like a true money sniper, I bought a put. Let's go. Making money in both directions and rolled it back down for an extra 50. And he had a total of a 505% gain. This is a 6x on his money, guys, okay? He said, who else other than Coach and Money Team turning $25 into $170 overnight? Let's go, Coach. I'm done for the day. Thank you for putting us on TSLL. We lit. Blessings. I'm so proud of Jason because he is the epitome of what I want to see thousands of people do. If everybody can just follow what Jason Blueprint is, if you can follow his example, it's possible. Okay, so listen, man. I wanted to love on Jay. If you see this, man, just know I'm super proud of you. But guess what? We gonna
This
run it
RR
back
is interesting.
Monday. We gonna run it back Monday. And look, we gonna hit Tesla in both directions. Okay, we gonna hit them again in
Robotics.
both directions. Okay, everybody be in the Discord first thing in the morning Monday. Everybody else consider joining the money team. Now let me get to these plays. Okay, check this out, guys. If you are going to get ready for what I consider to be the next thing after AI, but listen, AI is just warming up. AI is just cooking. So if you still want to play AI, I am a firm believer. I've been in the market a long time. Some of the new stuff is going to still get swallowed up by the current stuff. That's
Just above
new. You know,
30.
that's understood. Some of the new stuff, you'll see what I mean in a second. Ones you need to have on your radar, guys, in terms of quantum computing is QUBT. All right. Right now it's $15. 5 or 10 years from now, when it's $50 or $100, you remember Coach put you on this well in advance. Okay, QUBT. Everybody go do your research. This is up a lot within the last year, and it will again be one of those ones. It ain't a lot, but this will be one of those ones. Another one that's up substantially is QBTS D-Wave Quantum. Guys, this one is up tremendously over the long haul. You use pullbacks, downtrends, corrections, all that as a chance to rinse, repeat, reposition the whole nine, okay? These plays are volatile and they're high risk, so please manage your risk, okay? So meaning, if you got this when it was much lower and then it runs up, you guys have to make that decision because you are the CEO of your portfolio. You got to make that decision to lock in some profit, use a trailing stop loss. So then if it comes down 20%, you get up out of there. And then as it settles and get ready to go back up again, you jump back in if you still desire to be in a play. You should always be buying. You should always be dollar cost averaging, okay? But other plays that's going to win in the space, guess what? This is what I mean. NVIDIA, ticker symbol NVDA. So listen, the AI party is just warming up. Even though since 2023, it's kind of been cooking. Stocks them ran up astronomically. But I believe not only is AI just warming up, okay, there might be a temporary bubble just to let people catch their air, see what's possible, and get ready for the next run up, okay? But also, the quantum computing is still years out. Even when it do get to a level of significance, guess what? It won't surprise me if NVIDIA is still the dominant player or beneficiary when that time comes, okay? Don't sleep on Jensen Huang, guys. Listen, these brilliant minds are in position and they know how to play the game better than everybody. Another example would be TSM, that's Taiwan Semiconductor. I can also see from a quantum computing space. Follow what I'm teaching you guys, okay? Players that are already solidified, known, and established will be beneficiaries, might even be the leader temporary. And my temporary could be a 5 or 10 year stretch until all the underlying players get their bearings and their footing under them. Let me know if that's understood, okay? TSM, don't sleep on them, okay? AMD, please don't sleep on AMD, okay? When you have something like NVIDIA, you also have something that's going to be a natural beneficiary like AMD. AMD is in its own right regard a phenomenal company, really, really phenomenal leadership, and is doing their thing as well. Do not be surprised if they pivot smoothly and or incorporate seamlessly quantum into what they already are perfectionists at doing, what they are already exceptional at doing. This goes for TSM, this goes for NVIDIA, this goes for AMD, as well as Palantir, guys. Ticker symbol PLTR. I told you guys before Wall Street knew about Palantir, I was telling you guys about Alex Kart, the CEO for Palantir. He the wild head. guy. Don't let his look fool you. I told you years ago, I rock with him because I invest in people. I invested in him. He the type of CEO that I know gonna get busy on Wall Street. Some CEOs are good for a head coach job or a general manager position of a sports team. Some people are good leaders of a nonprofit. Some people are good leaders of whatever the sector may be. When I saw him, this was years ago. Again, when I used to say, man, they sleeping, guys. They sleeping on Palantir. They sleeping on Palantir. I used to tell you, he been on AI way before it was cool, popular, or sexy. He been talking that talk. I used to say that. Go back and look at my old Palantir videos when the stock was $8. I always say he been talking that talk. That's how I used to say it 4 or 5 years ago. Okay, don't get nothing twisted. He will probably wrap circles. If somebody challenge him, he's just chilling right now. But if somebody act like the quantum stuff is way next level, he'll quickly be like, "Oh, y'all talking crazy? I'll take over that too." If he put his focus on that, mind you, AI is just getting warmed up, so he about to run it way up for Palantir. We ain't even hit 200 yet. We gotta still hit 220 on Palantir, so we got a whole long runway. I'm preparing you early for quantum, but I'm showing you some of the leaders and players and companies that's going to be pivotal parts of it when the time comes, even though their primary focus ain't quantum now. Leaders that's already in the lead, one thing they stay in the lead by doing is pivoting when it's time. And so don't be surprised when they swallow up, gobble up, and take market share in that space and sector too. Let me know if that's understood. Okay, guys, listen. Those are what I got for you guys. Get in these early, get in these on all pullbacks, dips, corrections, and bear markets. So you in position. That's when we buy, okay? Don't be buying way up here. You want to get it when it's down low, when it's had a pullback, when they yank it down after a blowout earnings that was phenomenal and they take the stock down. You need to say, yep, okay, when they do that, the company did their part. Wall Street brought it down. Boom. All that simply means is we're going to go back up in a few weeks, a few months, and definitely we always go up over years. The stock market is the greatest vehicle for wealth creation. If you hold long term, 1 to 3 years, the stock always go up as long as you pick quality companies and you get in at the right price, okay? Listen, guys, we're going to get up out of here. We make videos like this every day, so if you like this one, make sure you check out the next one. Remember, most people see the end result. Very few consider the journey. Do me a favor. Don't forget, subscribe to the channel. Make sure you guys grab some free stock. Use my link below. And I'll catch you guys in the next one. Peace.
All right, guys, let's take a look at a company I'm pretty excited about. It's a robotics company. It's called Rich Tech Robotics. And yeah, it's pretty interesting. Chris Sain's got some great motivation, inspiration. I do think we can direct that inspo towards a company that I think is poised to break out. So I'm pretty excited about that personally. And let's jump into that right now. Okay. Let's break it down. There's one robotics company that could become the next Tesla. That's crazy to say for a $3 stock. But people thought Steve Jobs was crazy. People thought Elon, they still think he's a little crazy. Let's jump into what this stock is and why the buying opportunity is so big right now. Here it is. This is the company Rich Tech Robotics. It is based in Las Vegas. And if we take a look at their robot, we can see some of that Las Vegas flair. Okay? Here it is. This thing looks legitimate. I mean, look at this thing. Look at the tactile granularity of this device. It's pretty solid, right? I know people are down on robots, but this thing just picked up a cigar, handed it to its partner, and you got yourself a pretty effective robotic bro companion. Okay, bro on demand, bro you can buy, whatever you want to call it. We don't have to be too jokey here. Okay, this is a company that if you take that application to the food and beverage service, okay, pouring drinks, grabbing a cigar, and you expand it a little bit and think about industrial applications, Amazon, package picking, food picking, and humanoids in senior centers, in your parents' house, in your house, doing jobs that people don't want to do. The market cap, the market opportunity is both massive for this company and for the sector. So who cares what they do? Well, you care because you want to hold the company. If you just look at the chart though, there's a ton of volume recently, and it is coming up over this 350 level. Would it have been great to get in before 3? Yes, but also you didn't know that this move was going to happen. Okay. I think this is the much better play rather than SERV. Okay. Serve has just been pretty brutal. So in terms of risk, I think RR is a little bit more of a upward trajectory and less dangerous. Okay. You can take your pick. Okay. Perhaps you could say there's a way to risk very little here because this is sort of a large channel forming that it just broke out of. But I'm not here to draw downward lines and do astrological surveying on my charts here, okay? This is pretty obvious. It's a big flat straight line here. It started to jump up, came back, and has a higher low and a ton of volume. I mean, this thing is just beautiful. So price levels, 350 is going to be a major one. 4 is definitely going to be major. So if you can see how it reacts to those levels, I think that'll be pretty healthy to deciding whether to keep holding it or not. 1350, that high going back to June, February of 2024. Okay. I guess this is actually January 1st. This is the monthly chart. By February, it was all the way down here. Doesn't matter exactly when this happened. It was more than a year ago. So these people sold, okay? It's very unlikely they're just going to open up their Robinhood app, their TD Ameritrade, their bank of whatever it is, and see that their RR position is up and then sell it, okay? These are the guys we're more worried about. And most of them, by this volume profile, are concentrated down here, which we can just see by looking at it. We don't really need this blue thing over here, although it's kind of fancy looking, so I keep it on here. Look at how few people are up here. There's pretty much no one. So once it gets up here, there's a lot of room to the upside. We have a career risk level. Looking right here at this level, you can get super granular here and say it's somewhere around 320. Okay. Risk a little, make dollars. That's the name of the game. As far as a little more about Rich Tech, okay, they don't have a lot of revenue, okay? Million. But we know that, okay? We didn't even talk about medical deliveries as a application. I don't know exactly what that is. I assume that's some type of surgical assistance device. I don't think they're talking about self-driving cars or anything like that. The restaurant one is the one they like to market because it's fun to watch their robot pour a drink like we just watched it grab a cigar. I assume heavy payloads has something to do with putting it in a warehouse and moving big packages around, or even in a machine type setting, if those even exist in the US on a large scale. Okay. Maybe at a ship dock, but I'm just speculating here for the value heads because I know you guys like to hear what the company's going to do. I respect that. In the long term, you do need to understand that. But this is why it started moving just a few weeks ago. This 4 million sales and licensing agreement in China. Okay. I know China is a little bit of a red flag for you, for some of you, and it's a eyebrow raiser for me too. But you have to accept that China is very advanced in robotics, and so to get some money from them at the initial stages is not totally a red flag in my book. Okay. It is something that you don't want all their revenue coming from China in the long term. But look, okay, they are operating at a loss. They are a $3 stock. We're not expecting that this company is to be thought of in the same breath as Tesla, even though I did say that right in the beginning. But there are some positives that they just had an agreement for this new property. Okay, they're not in a garage. They're actually expanding their assembly and manufacturing capacity. They're not just finding more space to put marketing and salespeople in. Okay, there is demand, and at the current time, China is filling that demand. Okay, so will some company in the US catch up? Let's hope so. Okay, that's why we're buying it long term. Will the government place an order with them? Let's hope so. That's why we're buying it. But this is where they're starting out. They've poured 16,000 drinks in Vegas just this year. We saw the video, and there's a lot of big commercial opportunities with serious, huge companies like Walmart that we all know and love, especially as investors. Okay? So that's really the fundamentals for this company. It's a $3 company. There's only so many fundamentals, but if we want to call them a leader in the emerging robotics era, why not? If you guys like this analysis, hit that subscribe button. If you want to talk about these stocks, talk about price levels, talk about when to buy them, talk about which stocks to buy on a given day, head over to stockscommunity.com. You can join for $25 for 7 days. If you like the video, like it. And if you want to join, you think it's worth it, give it a shot. And you know what, guys? We'll see if this new video is of interest to you. There is this new rare earth stock that is poised to break out, okay, right here. I think you're going to love it. And I will see you next time in the video comment section, in the live comment section. We did have a lot of viewers on X today. Shout out to you. I think long term you're going to want to head over to YouTube where we had some comments and some collaboration, as well as stockscommunity.com. All right. Everyone have a great Sunday, and